What's up, everyone? My name's Chris Marshall with my boy, Frank G. We are the hosts of Build Your Empire podcast. Frank G, tell the people what we do.
What's going on, everybody? Chris and I, we discuss established empires while showcasing us building ours.
Frank G, we have another guest. He's been on the show quite a bit. We love him. In fact, he's going to be a guest coming on once a month because he provides the most knowledge. He provides the most value. And everybody kind of loves the stock market episode. So, Ankit, welcome back, brother.
Thanks, man. Happy to be here. Happy to start this, once a month show as well. It's exciting to get something locked in like this. So
yeah, the first Monday of every month, figure let's have you hop on. We'll gradually increase the basic knowledge and get pretty advanced here. You have made me quite a bit of money. You've also lost me a bit of money, but overall I have been up about 10 grand with the knowledge you have provided. So we got to share this to the world.
Awesome. Well, I'm glad to hear that.
Our personal inside trader right here.
Well, I wish he was a personal inside trader. We had someone on the show who had some inside trading knowledge, and he made a fortune, and I wish he gave that knowledge to us.
Oh, man, be careful with that stuff, man. Rule number one is insider trading is illegal.
Well, Ankit, you don't know
only
me,
illegal
Frank
if you
G.
get caught, right? Only illegal if you get caught, yeah.
Yeah, well,
no.
yes.
You're pushing the boundaries however you can, huh?
Yeah.
I mean, at the end of the day, dirty money still real money.
True.
Well, it's interesting. So you were here episode 15. We started Stock Market in 101. That was April 3rd, right when the market everyone was scared. The market was crashing due to the pandemic.
Ooh, tanking.
Then you came back, episode 51.
Reciprocals.
June 8th. Things were just killing it, on the rise. So now you're back, episode 67. Welcome back, Ankit. And we're ready to see what the market's got in store for us.
Cool.
So,
Cool.
Ankit, last time you came on the show, you recommend AbbVie. Tell us where this is at.
AbbVie. I think AbbVie jumped up to like 102, 103. It's come back down since. It's now hanging out around 96. So hasn't done too much. If you have a decent sized position in it, if you're able to sell some options, if you know what that is, I would actually recommend selling a call option at this point. If you know what that is. If you don't know what it is, that's something we'll probably get to down the line.
Well, you know what? It seems like
we
go right to intermediate. Wait here. Explain the call option and explain puts. Go ahead. The floor is yours.
So a call option basically gives you the right to buy, but not an obligation. So it gives you the right to buy something, in this case a stock, at a certain predetermined price. So basically it'd be, like if I went up to you, Chris, and I said, hey, I want to buy 100 shares of Microsoft from you at $210, right? And I want this contract to be good until August 15th. And you say, okay, sure. You'll have to pay $2 per share, but you can buy that at $210 until August 15th. So in this scenario, if Microsoft was able to go up to $250, I would win out big there because I only paid $2 a share, right, for that contract.
So you're
plus
paying
$210.
So you're paying $200 for the contract, but you're obligated to then buy 100 shares.
So you're not obligated. You have the option to buy it, right? You have the option. So if it doesn't play out in my favor, like remember I told you that I would buy it at $210 a share.
Yes.
If it goes down to 205, that wouldn't make sense for me to buy it at 210. I would just buy it.
So you would just lose the $200 contract.
You got it. Yeah. So options, it's a way to play with leverage. What happens is you don't have to risk as much money, and you get access to the upside or potentially the downside of the stock. I wouldn't necessarily recommend it. I would say like this is something that you want to have some money saved up. You want to have some money in the market first, and then start venturing into this and try to understand it before you really.
So this is where I've been, right? I have now been trading for over a year. I've been taking advice. I've been listening to you, and I've yet to do options because one, it's risky. I don't like betting, and
Mhm.
I'm not fully understanding the knowledge. In fact, I even sent you a DM from one of my followers on Instagram, and he wanted some stock information.
Yeah.
And he said, "Hey, do you do options?" And I told him exactly that. It's too risky, and I don't know enough. And he said, "Oh, neither did I. I lost a ton of money."
Yeah.
Exactly.
Yeah. And options are something where, it's called a zero sum game, right? Which means that for one person to win, the other person has to lose. There's always a winner and a loser. You think about stocks, right? Let's say Chris Marshall, you bought a stock at, you say, let's say Microsoft again, right? You bought Microsoft at $210. You think it's great because the stock is now at 214. So in your head, oh, this is awesome. I already made $4 a share. The person who sold it to you, while you think, oh, he might have missed out because he sold these shares to me, you have no idea since when he was holding those shares. He could have bought those shares at $95, at $100. So for him, it could also be a win, right? That's a scenario where he won because he cashed out. You win because the price continued to go higher. In an option, with options, there is a loser and there will be a winner. It's not, there is not a scenario where both people
See,
win.
that's scary because I don't want to play poker with a professional poker player when I never play poker.
Yeah, and that's really why I think for options it's something where there shouldn't be necessarily a rush to get into it. Build your portfolio a little bit, have some cash on the side for emergency expenses, and then you could feel free to jump into it. Originally, options were made to hedge portfolios. So in a scenario like in March when the coronavirus, hit and everyone's stock portfolios got crushed, you actually have a lot of these professionals with these massive portfolios. Options is a way for them to buy insurance, basically. And from there, it just turned into, a lot of day traders and stuff like that use it as gambling, but the professionals mostly use it for insurance.
Yeah, you're teaching me as well, Ankit. So you not only do you bring value to the listeners, you bring value to me as well. So thank you for that.
Yeah,
Now,
for sure.
Ankit, I mean, the market has been on essentially a bull run, correct? I mean, it's just been specifically NASDAQ and technology. Everything is on fire to the point I'm hot right now.
Yeah, for sure. I mean, things are. I definitely didn't expect it to come back this quick. I thought we would have a little bit more time before things really.
You thought it would be more like 2008, but you also didn't expect it to drop that quick. But my concerns is how hot can it be, and is it if in March if it dropped that quick, who's to say it won't drop again that quick? And if you do see a sudden dip, do you sell quick and buy back, or do you just let it rock like majority of us have?
Yeah, so it really depends whether you're an active trader or you're looking at this as more of like a long-term play. And the reason I say that is there's always going to be, you should have stocks in your portfolio that go up and down in certain scenarios, right? And in this scenario where we are
Facebook,
right
for
now,
example,
yeah.
Facebook, they're constantly in court. Once they're in court, stock goes down. Once they have a new product, stock goes up.
Yeah, Facebook's one where, like, look at the coronavirus, right? Everyone's doing online shopping. So Facebook being pretty much the biggest, Google might be their biggest competitor, but either first or second largest online ad platform for online shopping, they're going to do well, right? You already have that assumption that they're probably going to do pretty well in a time where a vast majority of people are shopping online pretty heavily. So definitely those things to look out for. Now, you also want what I call a barbell strategy, which means if things don't go the
My
way,
boy Frank G knows about barbells, right? Stud.
Lift them up, put them down, baby.
put them down, yeah. No, but a barbell strategy, if you look at a barbell, right, you have weight on both sides, right, to keep it evened out. And so really what that means is while you have the tech on one side, or you have the companies which are going to benefit really heavily from the coronavirus, On the other side, you also want to maybe start inching into some companies that, might not be directly positively impacted by the coronavirus, but over time, might be a better value play than the already very expensive tech stocks. So if you look at something like the banks, it could be a good time to get in the banks here. If you think the economy moving forward is going to have is just going to improve overall, the banks could actually be a good place to get into. There's definitely a few other sectors in there. I like, with everyone staying home, I like things like Pepsi, right? Consumer brand packaged goods stock where people are going to buy that regardless. And so that's always something that's nice to have in your portfolio.
So what about, so I was reading a little bit today. So statistically, apparently August is always the worst month for stocks.
Yeah.
Is there like a room for August to be, this bright light right now?
So before Ankit answers your question, one of the first things he taught me was something regards where go away in summer.
Yeah, that's almost there. And that's there's a phrase. It's called "sell in May and go away." Right. What that means is the summer historically has been not the best time for the stock market overall. Honestly, I would have to look into more reasons as for why people think that's the case. But
I bet you they're not throwing as much money in there as they're spending it more on leisure.
Yeah, it could be that. It could be that. But overall, the summer just hasn't performed that well over time. And so sell in May, you sell all of your positions in May or a good amount of your positions in May, and then you come back into it, either approaching Q4 or like sometime like close to September, you can jump in as well. I personally don't follow that. I don't believe in selling. I think if you're invested in a company, you should have a thought process as for why that company is going to improve and where that company is going to improve. And as long as that's still intact, as long as you still believe that, it should go up, right? As long as they're following that path, it should go up.
Well, I certainly believed in Microsoft today. Certainly decided to get into a little bit more. I mean, tech obviously is the front runner right now, right?
Yeah, for sure.
Tech and energy. I'm seeing like energy's big now.
Yeah, when it comes to energy, I think renewables, right? Like you look at some of the companies that are trying to change the world. Like Tesla is a big one. Their big thing is not that they're a car maker. They're not going to end up making hundreds of billions of dollars from cars. It's going to be from their battery technology that they have. And so, and from Solar City and from all their space projects and really just pushing the bar as for what's possible with science.
But that also is all dependent on can you get that extreme technology at scale at a consumer cost, no? Isn't that extremely hard to do?
Yeah, it depends who your customer is, right? Like you don't always need to sell to someone like me and you. You could be like, you look at a company like Salesforce, they're only business to business. They only sell to other companies, right? So if you're a company like Tesla, SpaceX is a division of Tesla. Your biggest customer is NASA, right? And then you have like the Chinese, I don't know if the Chinese Space Agency is a customer of theirs, but you have the Chinese Space Agency, you have Russian space agencies, and all these other ones that are using the Falcon rockets. So your biggest customers don't have to necessarily be individual consumers. They can be these massive governments or companies as well. And that's something that a lot of people like to look out for, companies that potentially think of it.
Now, let me ask you this. I was talking to a few people over the week, and, someone said I play with blue chips. I never actually heard that term before, but it was pretty self-explanatory, higher end stocks. Is there other divisions here? Are there red chips, pink chips that I don't know about?
It's actually a great question. I'm not sure. I know I'm aware of the term blue chips, but I am not sure. I would say an income stock.
Is Amazon considered a blue chip, Like if Microsoft worth 210 is a blue chip and Amazon's 3,000 and that's a blue chip, then I'm not getting. There's
Where
just
the
too,
term comes in.
Well, yeah, there's just too much of a gap there. But a $90 stock is not a blue chip. I'm not getting it.
You know, so again, what you're looking at is actually you're looking at the prices of the stocks, right? You're not
Yes.
necessarily looking at the value of the stock. I believe the term, so don't quote me on this. Well, I guess you have to quote me.
You're quoted, yep.
But yeah, but I believe the term comes from poker, where
Clearly.
you know,
Yeah.
bluer chips are higher value chips. It doesn't necessarily have to deal with the value of the stock, but it's how mature a stock is.
And
So
go ahead. I'm sorry.
I was going to say blue chips are typically more like your established companies, like your secure companies. They're not going to go anywhere. They're also not going to make you, a killing, but they're places where you'll sleep well at night.
Sounds like safe
money.
betting. Safe
So
investing.
so Frank, that actually brings me to my next point. Is I was talking to someone this week and he asked me, "Oh, how much money did you make this week in the market?" I made close to $1,000, right? But my portfolio is relatively safe. It's conservative. It's businesses has been around for decades, right? Expensive, but they've been around, so they don't really fluctuate that high. He said he made about 3,000 in the market with about 25,000 in the market, and I asked him how he did that, and he said he shorts, which means he essentially day trades. I'm assuming that's what that term refers to.
Not really. You know, shorting, a lot of people who do short stocks are day traders, but just because you're shorting doesn't mean you're a day trader. Shorting just means that you're basically betting against stocks. You're betting that the company will go down. And so that's really what a short is. It's not a game I play very much. I personally think that it's a losing game because if you look at the long-term trajectory of stocks, you know, people always say it's never been a bad time to put money into stocks, right? Because they're always been going up. So, you know, you're betting against this long-term trend. If you're shorting a stock, if you're betting against a company, my advice would be like, you better have a good reason as for why you're doing that. And I wouldn't stay in it very long.
Betting against the company means you're putting a put in.
Well, a put is if you wanted to short the stock, like if you were to buy a put, you would be betting against the company, and that's how you would do it with options, right? The way you would do it with stocks is either going long, which is buying, or going short, which would be technically borrowing and then buying it back, or betting against the company. It's an easier way to understand it.
Yep, still all seems.
We may have to make these episodes an hour long.
Get a pencil in our hands.
Yeah.
I tell you what, you know, once you get into options, I would say for options, like the best thing to do is it probably deserves its own show, because within options there are a bunch of strategies, and the two which I would, you know, for people who are listening to the show, if you really want to look into options, the two strategies I would start off with, one, which I really like, is called a cash secured put. And the other one is a covered call. Now, cash secured put basically means that you have to have the money in your account for those 100 shares. And if the price goes below a certain point, you will buy the 100 shares at whatever price you decided. Reason it's good is because you'll be buying it, hopefully, at a cheaper price than where the stock is at today, right? So you're not buying at the top if you sell a cash secured put. Does that make sense?
Somewhat. I tell you, for the listeners, I wanted today's show to be very basic.
Super basic.
Like, what does portfolio mean? And you're throwing around terms and phrases that me and Frank are like, all right,
take it to the next level.
Yeah, we gotta Google it after.
Yeah, options certainly a future episode. Seems too complicated for Stock 101.
Yeah. So let's break it down a little bit. So do you guys have any, let's see if we have any other questions
Yeah,
that
what's the
might be
difference between a bull market and a bear market?
Yeah. Dude, bulls, man. That's what you want, man. You want the bull market. It means the market's going up. Bear markets are markets coming down. I believe it means a 10%, a 10% move from the bottom constitutes the bull market, and then a 10% move down from the top is going to be your bear market, though. That's what officially starts those markets.
That's a nice glass bull you got there, Chris.
Yeah, you know what? I'll be honest. He's my pipe, and I call him Wall Street.
Looks freshly clean.
It's a great name, man. It's a great name. Yeah.
Still has the price tag on it.
That's because I thought about returning to Wall Street. But,
oh man, can't return him now.
Well, I could, because I've never used him, because you made fun of Wall Street because you said that when you smoke Wall Street, he looks dead. And then I don't want Wall Street to be dead. I want my shit booming.
We
I want it to be a bull market.
Yeah, we certainly don't want Wall Street to be dead. I'm actually curious, is the market, are you able to evaluate the market correctly right now, or is everything just completely screwed because of all the stimulus?
It's a great question, man.
I told him to ask that.
Question.
Oh, man, okay.
It's actually a very good question. And that when you value a company, you have to go based off of certain numbers right now. And right now, the numbers that people are evaluating stocks on, they're not 2020 numbers. They're not. They're valued because they know that this is not it's not a time that's going to last, right? The whole world is trying to push this coronavirus out of the way and trying to make the right.
But it seems like tech is going to not only last but advance.
And so that's the thing. Yeah, tech happens to be in a good spot, right? Like a lot of these heavy tech companies, they're riding these long-term secular trends. So they were already in place to do really well. What this did is it just sped everything up 3 to 4 years. It just made everything, move forward a little bit quicker.
Now, and because of that, right? So obviously Microsoft's been in the news. It's hot. I already owned a lot of Microsoft. It was one of my first stocks I bought and, really was confident in. And then today I just put it $2,500 in. Now, is that smart to just buy, I guess, in bulk like that? Or would you want to, I guess, divvy it up, right? Buy 500 each week for the next 5 weeks or so?
It's a great question. And there's a term.
I told him to ask that one.
You told him to ask that one, yeah. No, there's a term for it. It's dollar cost averaging. Means like investing a set amount per week. So as an example, I'm going to buy one share of Microsoft every single week. This week it can be 180. Next week it can be 200. The week after it can be 240. What that does is it averages out your price over time. So you'll never pay all the way to the top. Yeah, you'll never pay all the way to the top, never all the way to the bottom.
But I've just noticed that typically I'm pissed if I wait.
Yeah, and that's the other thing. A lot of people argue against dollar cost averaging and say it's more about the amount of time you have in the market as opposed to timing the market. Right?
Which makes sense, because I think what you're going to allude to right here is I had my average cost basis on Microsoft at about 150. So me buying 10 right off the bat only brought my average cost basis to 165. So I don't really care about buying that in bulk because I'm still profiting as a whole significantly.
Yeah. Now, someone to argue against that would say if you were dollar cost averaging, you might have picked up a few shares at 135, right? In the middle of the coronavirus when it got hit really hard. So as opposed to picking everything up at 165 or whatever price you did, to bring your average up to 165, you might have actually been able to bring your average down if you were to invest,
buy when it was low. But
yeah.
I mean, you and I, we were buying when we were low.
Yeah.
But it's scary because you don't know when the bounce back's coming.
Dude, always, man, always. I know. I remember a few years ago, and I always talk to Chris about this too. I started buying Amazon when it was $460 a share. And back then, nowadays you have Amazon swinging crazy amounts, but back then I remember Amazon fell like 14 or 15% after earnings one day. Scared the hell out of me. Like seeing your portfolio when you're in college, you don't have that much money, and then you notice this massive drop. It's a scary thing to do, to really pick yourself up and say, hey, look, I got to look longer term than just this year, than just this, couple quarters. And
Now,
where's this going to go?
Which by the way, if you look up top on the Zoom call, we have roughly 6 minutes. So we'll be on air for another 4 or 5 minutes here. Then we'll end the show. Now, you mentioned how you essentially were broke in college, kind of. You were hustling. I see you. Dave Portnoy, right? Davey Day Trader, my boy. You're not a fan. I certainly am. I believe Frank G is. So he has the power to get college kids to download Robinhood, start trading that don't know a damn thing. Is that good for the market or bad for the market?
I think good for the market, bad for the market. It doesn't really do much because the amount of money that these college students are going to have won't be enough to make major. Yeah, it won't be enough to swing anything. It's great from the perspective that what he's doing is getting people involved at a young age. Where it becomes a little dangerous is like that person that DM'd you saying they lost a ton of money in options, right? You're going to have those.
He could listen to someone like that. That makes sense. And when sports gambling comes around, he's going to sway everyone to gamble on sports. That's why I'm heavy in Penn, which is another tech company. I looked it up.
Heavy in Penn, yeah. So, I mean, that's a good one, right? Like if you like sports betting, if you like gambling, if you're a casino guy, it could be a fun company to ride and to watch it on the way up. I'd agree with that. Yeah.
So real quick, back to Robinhood. So like that's huge with millennials. It just seems it's a younger app, or a lot of younger people use it. It seems like the people that I talk to, they don't know what they're doing at all. I mean, someone was happy about buying like an $11 stock, thinking it's gonna go up like
quadruple.
But they
Kodak,
also bought like
Kodak.
Yeah, Kodak's definitely one of them. But they bought like two, and they, so I don't know if the young people.
I think that's relative to the person's net worth, right? I mean, someone who buys two stocks, not in a stock game, who only has $5,000, is hyped that they're even in the game. Where someone who has $100,000 is just, that's not even gonna make you money. It's worthless.
Yeah. For me, I mean, it's all relative. I'd agree with that because for me, I started off with $300. I only had $300, and I invested in Disney at that time. And but I told myself that as I grew that portfolio, and that was years ago, but as I grew that portfolio, that I was going to use that money almost like tuition to learn, right? And if I lost the money, whatever, it's only a couple $100. Knock on wood, I didn't lose the money, and what's happened is I've done quite well for myself. So I'd recommend sticking with it and just battling through. Whatever.
As the time winds down here, what is the stock of the day that you would tell the people to at least observe, if not buy?
Oh man, Frank actually called it out earlier in the show. Microsoft, man, is the one to watch. If company's on fire regardless. They're in all the right places where you want to be. They're in gaming. They're in the cloud technology. They're competing with Amazon with web services over there.
If they get TikTok, they're going after Facebook.
And so that's the thing. If they get TikTok, I actually think they have they're just opening an entire new market for themselves, which is going to be, they're already they already have Microsoft ads, but this is going to be like next level. That'll be a big driver for
But that's what's amazing is that you can buy something, acquire it, and now you're in the market and a big player.
Yeah, it's very true. I mean, you look at, unexpected things happen in business and this company is big enough to do really, they can purchase any company they want as long as the government lets them. So Microsoft, pretty much whatever they want to do, it's wherever they see their next big moves, that's what they're going to
There it is. What's hot with Ankit?
What's hot?
that the new name of the show? Is that what we're going with?
Nah, we'll figure out your brand, and we got it. I mean, look, we love having you on the show. I mean, I saw Frank have a dumb look for about 10 minutes because he didn't know what the hell you were talking about. But
Yeah, options got me a little bit.
Yeah, I figured that. I mean, I had a semi idea, but I mean, I've never placed an option, so I'm still a novice myself.
Yeah.
That's why we have the show. This way we can have conversation about it.
For sure. That's why I was a little worried about going into options. I think it's a little.
Well, let me tell you, for us to be off air to say we're going to be very basic, you went in pretty hard. Frank's like, well, you're there. You might as well continue.
You might as well just go with it. Yeah.
Well, that's just what's in store for the future for everybody listening when Ankit comes on.
Every Monday, the first Monday of the month, we're going to have Ankit on, and we will be talking markets.
Yes, sir. Thank you again, Ankit. Appreciate you. Man. Always for that knowledge.
Thanks for having me on the show, guys. And the one for the next show, let's see how it does in 30 days. Microsoft.
Yes, sir. We'll see you next month, buddy.
See you then.
All right.
Peace.